Gold and silver prices to rise to $16, $50 and $30 per ounce by 2020? Question mark. Hi, I'm Mark O'Byrne, the Research Director of GoldCore, and in today's video update, we consider the outlook for precious metals prices, specifically gold and silver, and how they are likely to do in 2019 and 2020. So this is a topic that I suppose most of the market, the media, and indeed many of our subscribers and clients want to discuss. And we tend to focus more on gold's fundamentals and gold's value and the reasons why you should own gold as a hedge and a safe haven asset rather than solely on the price, because the price is finger in the air stuff and crystal ball stuff, and ultimately nobody knows, and it's important to acknowledge that at the very outset. And past performance is no guarantee of future returns. At the same time, past performance can give you an indication of how an asset class is likely to perform, and we do think that there are many signals, signs, indications that we have bottomed, the precious metals markets have bottomed, and that we are in the next stages of this secular bull market. So yeah, I mean, the bottom line is we think there is the possibility, a strong possibility, that gold prices will reach those levels in the coming months and years. And I don't really want to get into my prediction for the gold price in 2019 because it's such a short time frame, looking at 12 months time, and therefore we try not to, but we do take part in the Bloomberg Gold survey and the Reuters Precious Metals poll, and within these surveys we said that we believe the high in the gold price, when we were polled in early December, we believed the high in the gold price would be $1,600 per ounce, but since then obviously gold prices went up very sharply at the end of the quarter in 2018, and it went up in December as well, up 5% in December gold was. So we've had to revise upwards our outlook for gold, and we do believe that the high for gold in 2018 may be $1,650. At the same time, as I say to the Bloomberg journalists and the people who poll us, we don't know. We don't like to be pigeonholed into an exact time frame of, say, 12 months. But I do think I'd be quite confident that by 2020, so a 2-year time frame, that we will see gold above $1,650 and indeed silver above $30 per ounce. And I suppose it's because of just very, very strong fundamentals in terms of the supply-demand equation, and very strong, robust global demand for both precious metals and relatively lack and anemic supply side. And it's also due to the macroeconomic, the geopolitical, the systemic, and indeed the monetary risks that we see out there today. And these are things that we cover quite frequently in our podcasts, and indeed we looked at again in the recent Outlook 2019 podcast that's getting picked up quite widely as we speak. So those fundamentals, which I'm not going to go into in this video, are very, very strong for the precious metals, very strong indeed, and we believe that should lead to much higher prices in the coming years, and indeed potentially strong gains in 2018. Technically as well, it's interesting that it appears that these markets have bottomed, and trend-wise, particularly with gold, a little less so with silver, but definitely with gold, the trend has changed, and you can see it in terms of if you look at the performance in recent years, and the table of gold. There's a table we frequently show and will show in this video, which is from goldprice.org, and it's basically the performance of gold since GoldCore was founded in 2003. So we were founded in 2003, and that 15-year period, gold and silver performed very, very well indeed. And they're up roughly 10% per annum on average over the 15-year period in both gold and silver. A little bit higher return in silver, which is interesting. So silver's average is probably closer to 11% in the various currencies, and gold closer to 10%. So we believe that is likely to continue, and therefore on the low side in 2018, we think that gold and silver will do 10-15% per annum, in 2018 on the low side, and that would be an underperformance. But on the high side, we do think there's a possibility that we do see strong gains as we're seeing during the bull market from 2000 to 2011. And I alluded to this secular bull market, and people say, well, what's secular bull market? What's that mean? So secular bull market is basically a bull market that's driven by very strong fundamentals, and it's a long-term thing that happens over market forces basically drive prices higher over a long number of years, multi-years, and that's what we believe we are in, and we believe we have seen a cyclical bear market within this wider and longer secular bull market. So gold prices topped out obviously and silver prices topped out 2011, 2012, depending on which currency you look at, euros, dollars, pounds, or indeed other fiat currencies, and they fell sharply into 2015, 2016. They've bottomed and they're going higher gradually in recent years, and the gains were quite strong in 2018 in most currencies. Gold was down obviously in dollar terms in 2018, but only marginally, only down 2%, with very strong gains in the last quarter and in the last month. But in other currencies, including the euro and the dollar, gold made 2 to 3% gains, and in currencies such as Australian dollar, we saw gains of over 6%. And Australia was one of the weaker economies in the world last year, with their housing market slowing down quite significantly and their property markets falling. So I think that's really the key, is the decline that we saw in the stock markets, particularly in the final quarter. The trend seems to have changed in many of the major stock market indices around the world. We're down 10, 15, 20, 25% in many major indices, and many of them are in bear markets. And that's leading to this increase in gold demand and silver demand internationally, particularly in gold demand. And the recent data from the World Gold Council on ETF demand showed that ETF demand, gold demand, was up 3% in December. And indeed up 3% in 2018. So investors internationally begin to diversify into gold again, and indeed silver, and this is providing a strong support under the marketplace. So yeah, this is why we believe that these gains are quite possible, and it's also just they're very undervalued. If you look at their prices vis-a-vis their record highs. 5-6 years ago, they're still very, very depressed. I mean, gold is still 30% or so, 20 or 30% below the record highs that it was at in 2011, 2012. And silver is massively undervalued. It's, at $14, $15, $16 per ounce. It's 60, 70% below the record highs of $50 per ounce seen in 2011, 2012. So, and those, that massive price fall that we saw in silver remains, and it creates real value. And also the gold silver ratio shows that silver is about 1/85th. It was recently as low as 1/90th of the price of gold. So gold silver ratio, you can buy 90 ounces of silver with 1 ounce of gold, and that anomaly is seen occasionally, but it tends to mark bottoms in the precious metals, and particularly at bottoms in silver. So the precious metals are very undervalued. Silver is very undervalued versus gold. The precious metals are very valued vis-a-vis quite toppy-looking stock markets, which are beginning to correct and go into bear market, and indeed property markets in Australia, Canada, London. Some major property markets are coming under severe pressure, and we're seeing that trend continue in 2019. So yeah, no guarantees, no crystal balls, but I mean, if you look at the gold market and the silver market from 2003 through to 2011, I mean, there was very strong gains of, basically from 2003-4, gold was doing on average 15% per year, and had very strong years of over 31% gain in 2007 and a 30% gain in 2010. So we think the fundamentals today are as strong as that, and therefore we may see a similar gains in 2018 and continuing in 2019, continuing in 2020. And with silver, there were big gains. I mean, silver in 2005 was up 33%, 2006 46%, 2009 47%, and a whopping 83% in 2010. And silver today is very undervalued, and we see similar outsized gains in the coming months and years. So, as I said at the outset, past performance no guarantee of future returns, but we do think that the fundamentals suggest that this will happen. But absolutely no guarantees, and who knows, the prices may surprise us and remain depressed for another few more months and potentially for the year, particularly if the manipulation continues. And there has been manipulation of precious metals markets, as we've spoken about before, and as GATA, the Gold Antitrust Action Committee, has very clearly showed in voluminous circumstantial evidence, and indeed prosecutions and admissions of liability by big banks and their traders of manipulation of the precious metals markets. So that could continue for a little while longer, but we think at some stage the fundamentals are going to assert themselves and we're going to see higher prices. So, and then there's also the possibility of this currency reset that we've long spoken about, and that Jim Rickards has also spoken about more recently, and that the monetary authorities and IMF and the Bank of International Settlements come in, they actually reset the gold price to $5,000, $8,000, $10,000 per ounce. And in that scenario, gold would likely go, or silver would likely go much higher as well. And you're talking about, $150, $200 per ounce, which would be its inflation adjusted high from 1980. And we think that is inevitable at some stage in the coming months and years. So, yeah, I don't like to belabor points. No guarantees, but strongly likely, we believe. But at the same time, try not to focus on price. Try to focus on the value. As Warren Buffett says, price is what you pay, value is what you get. And that's particularly the case with the precious metals of gold and silver. They are hedging assets. They are safe haven assets. They are stores of value, as BlackRock, the biggest fund manager in the world, talked about in recent days. They protect your wealth. And that's why you should be diversifying into them in 2019, and it's a great time to just take some chips off the table, reduce allocations to risk assets and potentially cash, and increase allocations to the precious metals. So thank you for your time. Be safe, and we look forward to talking to you again the coming months and years. You'll get the market updates on news.goldcore.com, and you can sign up for our video updates and our daily updates there, and you can find us on all the usual channels. Take care. Bye-bye.